Hello everyone. Welcome to this presentation. My name is Si Wing Yi from the Yi Real Estate Network. We are a real estate investment club based here in San Francisco Bay Area, where over the past 15 years, we have taken our real estate investors, regardless of where they live, to buy out of state, to buy turnkey investment properties that cash flow, that have a good cap rate, that have a good return. And we partner with different marketplace, different market penetration in different part of the country, whereby our referring partner, they have a turnkey approach. They have property management. They have a unique business model. They do a lot of the extra work up front. They will package their homes, perhaps off market properties or pocket listings, and they don't want our investors to deal with the multiple listings or multiple offers, bidding war. We don't need that, right? So, and also we deal with referral partners in different part of the country or over many years to bring us good value properties. Sometimes they're new construction, sometimes they're resales in the marketplace, sometimes they are REO or real estate owned distressed property in a good location that require a little bit of fix up. But at the end of the day, these type of REO foreclosure type of properties, are good value. They have a good return potential, and that allow investors to make money short term and long term. So, and my guest speaker today, her name is Marilyn Kuzinski, and individual that we have known over the years in the Central Florida market. We have done business together few years ago, back 4, 5, 6 years ago, and now some of our investors purchased properties in her area in the Tampa Bay metro, and their houses are rented by her property management. So she owned the property management. So she performed very good for us. So I'm back with her because I feel that putting her back into our network of turnkey providers it'll benefit our investors. So she represent her area, Tampa Bay Metro, even spread out beyond Tampa Bay Metro. But I don't want to give away too much. She have a lot of great things to say, a lot of exciting investment opportunities for our out-of-state turnkey investors from California and other places that we work with. So without further ado, here we are, Marilyn Kuzinski. Here it is. Take it away, my friend.
Hi. Well, let me tell you a little bit about our company. We're a full service real estate company. We basically deal in wealth management type investors. Like I said, we want to take them and purchase. We want to keep them for a few years. Then we want them to be able to flip them and then start the whole thing again. We are also an REO brokerage. So, which means that we deal with foreclosures. So, as you know, in this market, it's a super hot market for the buyers right now, or the sellers right now, because there's very low inventory. This is coming to an end. We predict that the banks are predicting that, by the end of June, that the moratorium is going to be lifted. And this is going to be flooding the market with foreclosures again. That unless they extend that moratorium, they're trying to prepare us for the end of June. There's going to be a lot of nice properties that are already pre-owned that people got into bad conditions and just could not afford them. And we've already seen list pendants start into the court system. So they're already being processed through the system. So when that moratorium's lifted, they're going to move pretty quickly, and you're going to be able to get some great deals on some properties. These properties are probably going to need a little bit of work, but that's what we take care of for you. We get them inspected for you. We get contractors out there to bid on them for you. I visually go and look at the property before we even send it out to make sure that it's not a bombed out hole. All of these would be in good areas. We know that each person has their own agenda and how what they're looking for in the end. So we work on a one-to-one basis with each person directly so that we can fit their needs. But what we need to do is get these people set up right away, find out what exactly they're looking for, because once this starts rolling out, it's going to roll pretty quickly. This is not going to be a 2012 and 13 market. It's not going to drop that low, but it is going to drop. So you're not going to be, with us, we're going to be able to put you on that setup, get the emails rolling out to you so that you're going to be the first ones to see what's coming out of the courthouses when they foreclose. These are, like I said, these are all nice properties. A lot of them, just need a little bit of work. And, so, and then there are also good properties for the rental market, because these displaced owners are now looking for homes to rent. The rental market has exploded here. I'm telling you, a house that was renting for $1,500 a year ago is now renting for $1,900. So the ceiling on that has also exploded up. So at this time, it's an easy market. I feel that you will be able to get your return back very quickly. If you invest into the home, you'll be able to get the return back quickly, just alone in the rental market. And, we have lenders set up that work with, these type of homes. So if you need that, we've got that for you. We cover it from A to Z for you. Basically, you sit back and tell us what you want, and we find it for you, or it comes down through to us from the banks. We work with many banks. Ron is he is with the NRBA, which is the National REO Brokers Association. He's been one of the most, he's been an REO broker for Central Florida for probably the last 25 years. There are very, very few REO brokers in the market right now. Everybody wants to be one, and we happen to be lucky enough to have one. So we travel to Dallas every year. Him and I go and we meet with all the different lenders, the banks and stuff like that, to educate ourselves on what they're looking for to keep our brokerage status at that. He actually gave me some numbers to go over with everybody. Right now there's currently 87,000 properties that are backlogged from 2020 in the foreclosure market. Now this is nationwide. There are 34,800 properties around the Central Florida area. So these properties are, going to, I don't look for them to release them all at once, but they are going to start releasing them. And like I said, it's kind of a little bit different model than I think what you've dealt with before with the new builds and stuff like that. Some of these homes may be, from the 80s, some of them may be from 2021 or 2020. But what's going to happen is they were not able to make the payments on these. They probably lost their jobs, had some type of, during the COVID, unfortunately, we're not able to keep up the payments on that. We all know that we have to abide by contracts, and so this is what happens at the end of that. A lot of them are in excellent condition, because these people did not intend to lose their homes. They intended to keep them and live there and everything like that. 99% of these homes were owner occupied. So, when you own your home, you're going to take care of it. But that's where I come in, because I look at it from a different aspect than Ron does, because I look at it from the investment side of it. And I look at, are we going to be able to rent this home? What's it going to take to get this home to be rentable? I'm going to send, like I said, the contractors out there to give us a bid on what needs to be fixed. We look for structural issues. If it has any type of structural issue, of course, we want to shy away from that. We don't want to get into that, things like that nature. And then once we get all this information together, we provide it over to the buyer. And at that point, we kind of consult with them whether, and we also look at the longevity of it. So what is this house going to sell for right now versus 5 years down the road? And I've seen people make literally, $100,000 off the property when they sold it. And not only did that, but they rented it for 5 to 7 years and made $100,000 off the property and purchased the property for $60,000. So are we going to have a market that low like it was back in 2012? I don't believe so. But I believe we're still going to have a great market for that investor.
So Marilyn, what area you cover? I know you personally, or you personally live in Tampa area, or you live in the
We do Tampa, St. Pete, we do all the way from, we do the I-4 corridor. If anybody knows anything about Florida, the I-4 corridor runs east and west. So we cover about a 200-mile radius. So we go from Daytona to Tampa. So anywhere in those areas we take care of. We have satellite office over in St. Petersburg. So we're all set up over there. We have one in Orange City that we're set up to get ready to go there. And of course, Central Florida, our main office.
So Marilyn, what I hear you saying is that you have a team within your umbrella where wherever you find those foreclosure properties, the REO properties, you have a team of inspectors, rehabbers, and agents that scour different market within 200-mile radius of Central Florida.
Correct.
To find the deal that meets the criteria of our investors. Is that what I hear?
Correct.
Yeah.
So
yeah,
these deals actually come to us because with Ron being an REO broker, they have to trickle down through that REO broker. And there's probably, I would say maybe 10 in that area, in that 200-mile radius. There's probably only 10 REO brokers. You have to be selected to be one of those. So it's not something that, you can pay this money and get that, type of thing, like people do their license and stuff. We've got between Ron and I both, how Ron and I met, it's kind of a funny story, is Ron's a super hard worker and he's an REO broker, and I was working for another brokerage firm, and we were buying investment properties like crazy. It was back before the 2013, and so he decided to open up a brokerage, and he said, who do I know that could do this investment side for me and work as hard as I do? And so we knew that each other would take care of each other and work tremendously hard, and that's how we came together and everything. So
yeah, that's a very good niche. Help me understand. Okay, I've worked in Florida market for many years now, mainly turnkey, mainly new construction, some REOs that we have done in the past, because my network started to buying. I started my company back in 2004. So our investors invested into the Central Florida market and Southwest Florida market back in 2004. So we understand the big picture. So as I understand, the foreclosure system in Florida is a little bit different than other states. You have judicial foreclosure, meaning that it takes the timeline from the beginning of the foreclosure to down towards the end is quite long. So I hopefully we're not going to get to that situation. So at what point of the foreclosure timeline where you and Ron will be able to have access to the REOs to filter out and then to make it workable for our investors? At the beginning, or you buying the REO from the relationship with the banks in the local area, the Central Florida area, then they only provide the pipeline of a specific foreclosure properties to your system, and we're not dealing with the multiple listing service. They have the multiple listing service have no access to this kind of REO foreclosures. So you have this unique system where you can get these unique properties that meet your criteria. And furthermore, are you capturing this portfolio of homes in the pre-foreclosure stage or towards the back end and way down?
We are catching them when they've been foreclosed on. When they've been foreclosed on, they're given to us to sell, basically. So they do go into the multi-listing service, but they're given to us to sell. So we're catching them, and the foreclosure process is not near as long as people think. You know, especially once that list pendants has started. You know, there again, the banks have educated themselves on basically what the process is. You know, everybody was caught off guard back in 2012 and 13. And what ended up happening is they dumped a bunch of properties in the market at one time. I don't look for them to do that again because it devalued that market for that area. So I look for them to kind of to release and hold and release and hold, you know, so it keeps the market stabilized but not declining, which is a good thing because you never want to, you know, buy a property that, you know, 2 weeks from now declines. And so they're trying to, I believe, going to keep the reins on that and not just dump them all into the market at once. So we get them and then we send them out through the multiple listing service to other agents to sell also. But we get them first before anybody else gets them. So that's the benefit for dealing with us, is that we get hands-on first, we look at them first. I actually, you know, see them before they even hit the market, you know, can go, don't think this one's that good, but that one might be a great one, that, you know, for our investors and stuff. Doesn't mean that we put you ahead of anybody else or anything like that, but it does mean that we get first look at them and stuff. So, and like I said, there's a lot of them coming. And it's funny that you just, one of your investors that I still manage their properties for, so I have a lot of them, she was talking about buying something the other day. And one of the things that she said was, she said that, well, I heard it's really difficult to get title on these properties in Florida once they foreclose. That's not true. That is not true at all. In the state of Florida, you have, before you can close that property, that title is scrubbed clean and there are no liens on it, nothing like that. And they, you can't close a property in Florida without a clean title. And it's just like any other title that would be given to you. Now, you won't get a warranty deed, you'll get a specialty deed, is what I believe it's called. So just a little bit different, but you still have title insurance. And just like you walked into a builder and bought the home, you're going to get title insurance and the title to the property. They won't let you close without it. So.
Yeah. So yeah, I assume you guys know what you're doing. When you potentially promote a particular REO stress property, you do the title search, make sure, you know, there's no cloud to the title and all that stuff.
Correct.
I get it.
Correct.
Now, okay, from a high level, we all been hearing that, as a result of the pandemic, there are like 2 million people who are, under moratorium, and all that. Then whenever the moratorium is lifted, then you hear one side of the story whereby, some so-called experts out there, the YouTube entertainers out there,
right.
Some of them are predicting there will be a mass foreclosure, there will be a crash. Then you have other more rational, more educated, more credible experts out there. They're going to say, like, look, because of the rising prices of, because of high demand and low supply of inventory in the past 12 to 18 months, a lot of the people who are even under the moratorium, when it's time to sell, most of them have equity to in their houses anyway, so they don't need to walk away from a house on a foreclosure. They have equity, so they're gonna sell their home in a regular market and it'll be gobbled up in a regular market, and they can profit from the deal. So they're not going to allow their home to be foreclosed. So which, who is it correct?
Well, that is true. That is true. And we're seeing that right now. We're seeing the people that are in trouble. They're already selling their properties. But like I said, let me see who gave us these numbers. These was by John Cruz. He is a big REO guy that he says there's 87,000 homes on the market coming up. So these are the people that aren't taking the help or taking the ideal to sell their properties right now. Maybe they feel like, they don't have somewhere to go. Maybe they feel like this moratorium is going to last forever. I've had people tell me that, that they feel like the moratorium is just going to go on for 4 more years. And it's just like, no, I don't think so. And some of the people that have done the forlong the payments to the back of the loan, it's not really the back of the loan. It's most of them are 90 days after the moratorium. And so whenever somebody says that to me, I always tell them, you really need to check with your lender, because most of the time this forgiveness period is 90 days after the moratorium has been lifted. 90% of them have come back to me and said, oh my gosh, you're right. So they're already in trouble. And so those list pendants, like I said, they're probably so far in trouble. That's where these numbers come. A list pendants is filed when they stop making their, when they stop making their payments.
Right.
And so once, a bank's never out there to take their property. That's not what the banks want. They don't want the inventory. So they want the owner to pay for that property so that it frees up more money for them to loan. And there again, that cycle goes around and around. But the thing is that and I don't know how to say this nicely, people don't always take the advice that is given to them. So in the end, they end up making a poor decision now, which affects them later down the road. So, and I see those 87,000 that's in there every day. We're watching every day. I log into the court system every day and I go, oh, wow, this house is on list pendants, oh my gosh, that's a great neighborhood, because I also would like to buy, something to, invest in. And so, it's not just we're looking for other people, we're looking for everybody, basically.
Yeah, Merlin, I think if I hear you correctly, okay, coming back to my question to you earlier. So what I hear you saying is that perhaps I'm being a little bit too rational. I'm being a little bit too logical. You're not disputing what I just asked you. I asked you why would people allow their home to be foreclosed, knowing if a homeowner do more research, the homeowner who's in trouble will do more research, they should realize that the value of the home potentially is greater than the loan balance. Therefore, they could easily, rationally speaking, sell their home before the foreclosure will get into too deep. However, a lot of these homeowners are irrational. They may be misinformed or uneducated in many ways. They are stressed out for various reasons, job loss, divorce, whatever. They, not knowing they could easily sell quickly and even make a profit out of it, they let the house go. They get so emotionally distracted. They let the house go and they leave the house, and the house will go into the Florida foreclosure judicial system, becomes an REO 6 months later, 9 months later.
Not even 6 or 9 months.
It is, sad. It is sad, but it is what it is. So you and your system and your business model, you and your team of REO brokers will get the end result of this 87,000 of distressed homes from the bank and from the REO system. So it's unfortunate for us to, if you will, benefit from some of these irrational behaviors coming from the owners, but somebody has to do it. Somebody have to use.
Right, right, right.
So is that,
And it goes back to, you can lead a horse to the water, but you can't make them drink, type of thing. And some people just, I'm not going to say they're uneducated, because I can tell you there's a lot of starving realtors out there that's knocking on doors right now, trying to get these people to sell them. I think there's a mentality of it can't happen to me. Oh, the bank wouldn't do that to me. The bank is a business, and they don't understand that. They think that the bank is you and I, and that they'll call us up and give us a sad story, and we'll just say, okay, well, we'll work with you. Well, the working time has been going on for the last year, since last April. And so, they just don't, I guess, drink the water, so that's kind of what's happening. And a lot of them, you may have somebody that's lived in the home for 10 years, and they don't know what to do or where to go or what they would do. So they just sit and let the house be foreclosed on, which is unfortunate. But like you said, it's very unfortunate, but somebody cleans up the mess. And unfortunately, I'm not somebody.
Yeah. Okay. All right. Understand. Yeah. Okay. My next question to you. Okay. I think I'm beginning to understand your system. So I'm liking it. Okay. So a house. Okay. Let's say right now, there's not that many REOs trickling down the system. Not yet. I get it. In a few months, maybe, depending on the whether they can extend the moratorium or not. But nevertheless, so let's say there will be 100 REO properties coming into your pipeline from the banking relationship that you and your team has out of 100. Let's assume you pick 10 out of the 100. Okay. Mm-hmm. Then the reason why you pick 10 of the REOs out of 100, because it fits the criteria for our investors. Let me share with you my criteria. So my investors know what kind of property, because I'm acting on behalf of my investors. I know what they want, right? So here's the potential. Right. Correct me if I'm wrong. Let me paint the picture, the kind of properties that will fit my criteria and the criteria of my investors. A property is probably around $250,000, single family home, 3-bedroom, 2-bath, 15 to 1,800 square foot, typical, 250K, around that, maybe 200 to 250, maybe even $300,000, around that price range. If it is 150K REOs, hopefully the rental market will give you like $1,200 monthly rent. If it is a $200,000 REO property, the neighborhood needs to rent for maybe $1,650 gross monthly rent. And if it's $250,000 property, ultimately the rental market should command around $1,900 monthly rent. If it is $300,000 single family home REO, I would expect the monthly rent to be like $2,200-$2,300. So is my,
I think your numbers are low on the rents.
Really?
Yes, I do. I think your numbers are low. And let me explain why. When you're buying an REO, you're not going into a neighborhood that is a new build, okay? That's being established. You're buying homes in already established neighborhoods,
right?
Okay. And these established neighborhoods are probably 90% homeowners, maybe higher.
Right.
So there'll be very few rentals. Well, I always say renters want to live in nice areas. They want nice things just like we do.
Right.
They just can't afford to buy it for one reason or another. So I think your numbers are low because you're not competing with 10 other new builds in the area and not trying to build up a neighborhood. These are already pre-established neighborhoods that already have good names. because we're not going to take you. I mean, well, we could take you to the lower end. Those are very profitable, believe it or not. The lower income ones are very profitable too. But, you know, we tend to look at the resell down the way. Okay. If we have an investor, if we have an investor that's in for it for the long haul, then yeah, I'll probably take them down to the lower end, because I always say low income people need a place to live too. And believe it or not, the people that we rent to that have low income are very good tenants. They usually take very good care of the property. They pay the rent, because they're not like the middle class tenants that have the money to up and move. So they establish a home. That's their home. I mean, I have tenants that's been there for 30 years. And then, but you know, if they're not into it for the long term, then yes, you need to be looking at the 200, the 300s, even the 250s, because in the end, I want you to be able to make a profit off selling that property too. So it's not all just the rental, but it's what are you going to gain in the end?
Right.
And so that's why, and these pre-established homes, you're going to find one in this neighborhood, one over in that neighborhood, maybe two in this neighborhood, you know, so it's all going to be in neighborhoods that have been built up and don't have a lot of rentals in them.
Yeah. So what? Okay, Marilyn, what I hear you saying is that my rental projection monthly, my gross rental projection, I just shared with you relative to purchase price. Are you telling me my rental projection is too low? The rent could be higher than what I just said. So if that's the case, that's the case, the cap rate would be like 6 to 7%. That means for long-term buy and hold investors on these REO properties, the cash flow is very significant. If somebody putting 25% down payment, you know, if a 250K REO properties, my projection is rented for 1,900. If it's rented for 2,100, 2,200, then an investor put 25% down payment, they're gonna have like $500 monthly positive cash flow. So that's pretty darn good.
That's exactly what I'm telling you. Yes, I'm in that, the what do you call it, in the field all day long, or the pits every day, and I see, you know, we've got you know, you guys, we work together with Summerfield Properties that you did very well with out there.
Right.
And they are just, I'm telling you, in the beginning it was kind of slow getting it going, but it's going now. And properties that were 1,500 last month, I'm getting 1,695, 1,750, you know, that's, yes. So, you know, but the one thing that an investor has to understand is that there are going to be repairs to be made. So in this calculation, what we're going to have to do is,
yes,
if we're going to have to budget, if we buy a $200,000 home and we have an equity of $250 in that home, we may have to put $25,000
right
to make that home an equitable home to rent for the price. So, but we take care of all that for you. Like I said, we have inspectors, we have contractors that we work. And let me tell you, I've made our contractors bleed by the eyes for, you know, bidding prices. You know, they're super duper contractors, and where they make their money is they know when this market drops and that they have no work to do. They're very loyal to us because they know they can count on us.
Yep.
So they do everything for us a little bit cheaper than the average call the phone guy in. You know, very rarely do I go outside of our network because, like I said, I've almost made them bleed from the eyes, beating them down on prices because I want them to make money, but I also tell them these are investment homes. These are homes that it's all about the bottom line. And if we can't make that bottom line, then this isn't going to work for them, me, or the investor.
Good, good. Well, look, Merlin, you've been doing this for a very long time, maybe 3 or 4 decades in your market
Yes.
in Central Florida. So I trust you. I trust your team. You've been around for a long time for a reason. You're successful at what you do. You provide good service. Okay, let's go do this scenario. Let me give you another very important question at this time. Okay, I'm really excited about this. I'm glad I reconnected with you and your team, Merlin. So here's my next question. Okay. Going back to the scenario, you get your batch of REOs, for example, 100. You pick 10, right? You throw away the other 90. It does not work. You just whatever reason. So out of that 10, and then you show these 10 properties that meet our investor criteria. Our criteria here are the let's use an example of a $200,000 property, a distressed foreclosed property that the banks are giving to you. So $200,000, a 3 bedroom, 2 bath, 1,500 square foot, built in 2010 or whatever. So when my investor gonna pull the trigger on this particular REO property, can they do financing?
Yes.
Like back in 2013, 2010, as you know, most banks, they do not allow financing. You have to pay all cash. You're
Right.
competing against all cash buyers, the hedge funds, the institutional investors, the Wall Street people coming over the foreclosure market back in 2009, 2010, and buy in bulk in all cash, all these
Yep.
things. But so my investors, although some of them have cash, don't get me wrong, some of my investors from California, we're pretty well off. They don't mind paying all cash, but if they can do financing, they, and to pay, get loan pre-approval first, of course, through my team or my loan agents network, come through, make an offer for one of the stress property that they like. And so the other criteria I want, I know, when you rent to a foreclosure property, is all you buy as is, right? The buyer have to assume the risk the property. They have to do their own due diligence. They have to do inspection, appraisal. They come up with some extra money above and beyond the down payment and closing costs to pay for the fix-up cost. So my fix-up cost criteria, it all depends on. I would say, like you just said, I think my investors should not wanting to pay more than 25 grand to fix up costs
Mhm.
that they have to absorb.
Right.
Is
Well, let me tell you.
not we don't want to we don't want a total tear down. We don't want a total
No, you're not. I don't want you to have a total tear down.
cosmetic. We want cosmetic rehab, right? Like
And that's it. It's mainly cosmetic that we're looking at. Now I can give you a scenario that we had a house we bought back in 2012, and we paid, I believe, 259,000 for it, which was high back then. Okay, the 2013 they were selling for 60, 70, 80,000.
right,
259. So that meant what? That meant that it was in a superb neighborhood. Okay.
Yep.
So now the investor did put some money into it. We put $100,000 into it total. Okay. So now we've got 359 in it. That house rented for 10, almost 9 years for 5,000. I'm going to ballpark it at 5,000 because it went up over the years. And but we started a little bit lower. But that for 9 years rented for $5,000 a month. Let's say $5,500 a month.
Wow.
So do the math. They paid for the house within the first couple of years.
Yep.
They recently sold that house. I believe it was $659,000. That's what we're talking about.
Yeah.
And we've, like I said, each person's motto is different on how they want to go about it. But to buy that $259,000 home in a market where we can buy $80,000 or $100,000 home, there had to be something that stuck out to us on that.
Yep.
And we knew in the end, and that this house had the potential of still keeping an upper scale value. Do I want you to spend $100,000 on it? No, I don't. I want you to spend, really, I want you to spend maybe 10 on it, you know, because I want you to go in, let's put some new floors and paint, put the lipstick on the pig, let's run with it. And then we're going to rent it out and get your money back. And then when we go to sell it, we'll do another little bit better rehab on it. And then you'll get, you know, even better money out of it. And that's what we did.
Yep.
So the last thing that they did is, it was such a big house. I think the roof on it was like $30,000, but they came out smelling so great like a rose on it that, you know, the $30,000 roof was a big roof. You know, needless to say, it had a pool and everything, but you know, they made what we're about is we want you to make your money back on the house through the rental of it. And so then it becomes pretty much whatever you make over the remainder years, and plus your selling value. So we want to be able to sell it in the end for you. And then we, like I said, it's like this cycle. Then we start it all over again, because it seems like the market cycles like this.
Right.
And so we're going to be in this cycle for a little while. We've been in the, you know, the inventory's been low for a little while. And I think people have been scared with the COVID and been stuck in their homes and stuff like that. So, you know, there's not a lot of people out there going one-to-one to talk to people and say, hey, this help is out there for you. You know, of course, you know, I have to brag about our rental team, because our rental team had very, very, very few that were unable to pay their rent, because what we did, we got on the bandwagon and we started finding the help day one for these people. So we educated our tenants to be able to pay their rent. If they couldn't pay their rent, here's the person that you need to go to get help. And I don't think that's out there for the homeowner. And unfortunately, you know, they're going to get caught in this little trap, because right now everything's rosy and, you know, they're living there pretty much free. And, you know, that has to come to an end. And I don't think they see farther than tomorrow. And unfortunately, it's not going to be very pleasant for them.
Yeah. Yep, I totally understand. Okay, so we're coming to the conclusion of this webinar. I would love to talk more, but you know, we can have some future podcasts together, right? To follow up to what we just
definitely.
No, but
everybody needs to get prepared, because I know that these are coming by the end of June. We'll supposedly start to see them. So at the latest September. So I just don't want anybody to miss out, because they're going to come quick when they do.
Yep. So what I hear you saying is that right now, the way we work right now is I will alert my database of investors if they're interested in your system. At least they contact you and put their email on the so-called wait list, right? So you know who you are. So once the moratorium is over, hopefully in June 30th, if not, then wait longer.
Right.
That's fine. So what I hear you saying is that you do not, right now, you do not have any of these REOs deals available.
We have a few, but they're not anything that, you know, because if there was an investor that wasn't paying, the only people that's protected by the moratorium is homeowners.
Right.
The investors are not. So, you know, that's, you know, now some of them have reached out to their lenders and had their payments put to the back, or, you know, for long and all that. So they're protected until this comes around, but they have to be ready to make those payments when this lifts, or else they're going to be in trouble. But we have a few right now. Nothing that I would want to sell to anybody, because they are lower investment properties that, you know, now maybe one, but it's not completely it's not completely foreclosed yet. They're doing a property eviction because the house was full of furniture and stuff. But, you know, they're coming. They're already starting to trickle in.
Yeah.
and stuff. So, but if people aren't prepared money wise, financial wise, and like I said, these are definitely financeable homes. So there are, you can't do an FHA or anything like that on the home because of course you'd have to live in it. But these are definitely financeable homes. So they just have to be ready to move when it's time. So that's the reason why we're getting everybody prepared for that, basically.
Yeah, that's good. So the way I will send you investors is that I'm going to pre-approve them first. They must get, otherwise I want to send serious investors to you, right?
Right.
To your database. So I don't want you to, you're so busy, we all of us are busy. We can't afford to waste time for somebody,
Right.
who are tire kickers. So we want, motivated investors, experienced investors who have the ability to pull the trigger to see a good deal when they see one, and value working with your team. So let's do a recap. Here's my takeaway by talking to you in this past almost 1 hour now, which is amazing. But it's all great content. My takeaway, Marilyn, is that what I hear you saying is that there are very few people in this whole entire marketplace in an REO, real estate owned foreclosure, a business model that you're doing. Very few people do what you do. Number one, because you have been doing it for so long in the Central Florida market. Central Florida market, the real estate market has been going consistently strong, especially in the past 10 years, from 2010 to for right now, right? I mean, good affordable homes, great amenities. Sunshine State, Florida is the top 2 and fastest growing states in terms of jobs and population growth, or the whole things. So it's a good market no matter what. So it's a cash flow market. The numbers make sense. The whole 9 yards. So you guys have that specialty. Not many people have the kind of specialty that you guys have to being REO certified. Your team, Ron, it's very hard to be a certified REO broker. You have to go through a lot of paperwork, a lot of lot of substantiation, certification, if you will, to qualify, because that allow, by being REO certified, to allow you to access a unique bank's REOs, right? And not many people have access to this bank REOs that will coming down the pipe, shortly, right, in your system. So you got a unique system. You have a trusted team. I mean, you know how important it is from investors, especially from us in California, 4,000 miles away, to trust to buy remotely, to buy REOs with you guys, and knowing that we trust you guys. You guys have a good track record. You guys are honest, are credible. You guys do the right rehab. You're not going to gouge the buyer or scam them or overcharge on the rehabs or do some weird things, right? You guys are up and up.
Correct.
Right? You got the the rehab team, buy the right materials, fix the house properly, get the inspection right, and fix up the house, make it turnkey. So our investors can have a good investment. It's a win-win situation for all parties, for the seller, for the rehabber, for the inspector, for you guys as a seller of the REO property, for us as an investor. So win-win situation. What more can you ask for? So that's my recap. So before I let you go, what is your takeaway from talking with me and working with?
I'm excited. I look forward to, when we take an investor on, they're part of our team and our family. So we take care of them strictly, 100% from door to sell. So, they can count on us to get it like you said, get it rehabbed, find the right property for them. Not just sell them a piece of property. That's not what we're about. We're about the long-term relationship. Mm-hmm. So, because we want them to repeat. And that's what sustained us through the low years in the real estate business, is that we have had these repeats and stuff. So that's what we're all about.
Good. Well, looking forward to working with you, Marilyn Kuzinski. Thank you for your time. This podcast ran over, but the content is great. I will send this message out to my database of investors, and we can work with you long term, and look forward to working with you and your team, Marilyn. Thank you for your time, so that's it. And thank you so much for your time.
Thank you.
Yeah.
Bye.
Bye.